What should you be paying for earnings right now in a higher interest rate environment? Is 15 times cheap enough right here? Are you comfortable with that as opposed to the 22 that we were looking at for a long time? And then as a long-term holder, you know, is that enough of a lower price than what we've been used to that you can live with it through some kind of downturn?
Let me ask you a separate question. So there's the fundamental issue of what the Fed is doing. We were talking about this during the commercial break, right? There's the fundamental issue of what the Fed is doing, what Powell's doing, all of this. And the market moved on that. But over the past week, the market, I would argue, has also moved on. Government shutdown. We haven't even talked about tariff.
Government shutdown is meaningless.
Okay, we have Tariff Man, which is the China piece, which I think if you don't put that into
Tariff Man, yeah.
But if you don't put that into the soup, right? And now a debate about whether Powell will be fired or not. I know you're discounting that.
So if he fired Powell, I think that would be extremely market negative.
None of those things, when I called it a Trump tantrum, we used to call it the Tepper tantrum, a Trump tantrum, that none of the things that have happened in the last week out of 1600 Pennsylvania Avenue have done anything to this.
The Stephen Mnuchin thing.
And then the Stephen Mnuchin piece, zero?
I think the Stephen Mnuchin thing backfired on him because it made people wonder whether or not there was something going on. But so when you talk about the breadth of the decline that we've seen, remember the breadth of the increases that we used to see. How many times did Bob Pisani come on the air and say, oh, my God, this market has rallied so fast? Remember, it's just when it's going up, we're all relaxed, right? When it goes down as fast, everybody gets very, very nervous.
Last January, we went through a 1,000-point benchmark. It felt every 10 days or so. It was
exactly. It was
26.
insanity.
And by the way, I wonder, to your point about the 401k stuff, we turned the calendar into January. Everyone who can contribute to 401ks can start contributing again up to, you know, as soon as their income maxes out. I'm surprised that there hasn't been more front running of that January effect. I understand it's a known and it's priced in, but still there's going to be a lot of liquidity flowing into these markets to buy once the calendar flips.
But on the Powell thing.
Right.
Every Fed president that has ever hiked rates in modern times, the president has been furious with them. LBJ threw his guy against the wall and started screaming at him, okay?
Yes, but
Reagan was furious at Volcker.
But not as publicly as this. Look,
but it was known in the market. It was known in the market.
Hold on. That may very well be.
Absolutely.
The only point I'm making is, for a period, as you said, a year ago, as the market was going up, we would run a little bug on the corner of the screen called the Trump rally, and nothing actually had even happened. But we'd say that he effectively had jawboned the market up, and you gave him credit for that
because he was going to cut taxes dramatically, and he did.
Okay.
Yeah. By the way, the market had been flat, doing nothing.
I'm not disagreeing with you.
Then.
I'm just suggesting to you that we were very happy to say this was the Trump rally, and what I'm suggesting to you,
want a bug bag that says
I'm not putting a bug there. I'm just saying, like, let's acknowledge the obvious. I'm not. And by the way,
I think him if it goes back to October 3 when Powell was the one who started talking about tightening.
I think it's very interesting that we have actually separated out the presidents. It's very interesting that the president, by the way, appointed Powell. You can, like Bernanke, you either give him credit for Bush. There's the Bush presidency. Bush got the credit or the blame. Obama got the credit or the blame, by the way, the blame that you used to like to give him. Trump, he appointed him, gets the credit.
He was anti-business.
Gets
and he did
the
all
credit
kinds of
or the blame.
Of her business.
All I'm saying is like be consistent about what the message is here.
I'm very consistent. I'm very consistent. Here's what I'm consistent about. President Trump lowered the tax rate dramatically for corporate America, right?
When it comes to the
actual things that drive balance sheets, that drive the economy, he's been a positive, and Obama was a negative. His complaining and his jawboning and everything else, maybe there's a tiny layer there that leads to concerns within the market, but I believe that it's actually much more about the tightening of credit conditions.
Yeah. No, I was going to say, I mean, you've got to be fair, equal on credit and blame with the presidents, but
100%.
There's a bigger point than all of this, which is just simply economic cycles, which this one has been juiced up and extended, and interest rates does come into that. Because the interest rates is the ending of that cycle. You're taking off all the sort of artificial support, and that's what we're seeing right now.
But I would also argue that we juiced it as a result of the tax policy, which I'm not on the corporate side and on the personal side.
Delayed that cycle that we'll talk about for sure.
And that's what's all kind of coming together at the moment.